Hi guys, it's Steve from Disruptive Wealth Creation. Today we've got Jeff from Bitcoin Renegade, and we've got Guillermo from Finance ABC. And today we're going to be talking about why we invest in shares or why we invest in crypto. Should we invest in one? Should we invest in the other? Or maybe should we just invest in both? So we'll look at the reasons why we do it. We'll look at the pros and cons of investing in shares, the pros and cons of investing in Bitcoin. We'll see whether we can generate income in shares and make a profit, and see whether we can generate income and profit in crypto. And we'll just do a final summary, and hopefully we'll keep it within an hour. It's going to be tight, but let's go for it. So starting with myself, my name's Steve again, Disruptive Wealth Creation. I invest in shares and I invest in crypto. Jeff?
Hi. My name is Jeff. Normally I have this crazy intro that I do, but today I am just going to keep it simple. I have a channel called Bitcoin Renegade, and basically what we're doing today is we're going to talk about some key points of crypto versus shares. And I am going to be doing the talking point today of the crypto because that's what I know. My generation is the one that kind of missed out on the stocks a little bit because I was kind of too young for it. And I came just in the perfect time for crypto. So I'm learning from, my peers, and they're going to teach me a lot about shares and stuff. So I'm really excited for this collaboration. I hope to learn a lot today. I was talking to Guillermo earlier, and he was telling me about, the correlation with crypto and the stocks. So if crypto, is down, normally that means the stock market's down. So I'm really looking forward to his input on this. Guillermo, it's all you.
Glad to be here. Yes, I'm going to talk about investing in common stocks. And the reason I think investing in common stocks is important is because we have an opportunity to participate in the growth of the economy by investing in stocks. And we have a chance to invest not in the lowest quality stocks or the smallest companies, but on the best companies, the largest ones, the ones that have a very good brand or competitive advantage, those that have competitive moats that leave behind the competition, like Microsoft, Amazon, Apple. I mean, we can invest in all these companies by just buying an S&P 500 index. And there's no time like the present. Don't think, Jeffrey, that the bus has left today. I mean, my children are age 14 and 16. Over their lifetimes, the stock prices are going to quadruple or more. It's amazing, so investing in stocks is rewarding because you participate in the growth of the economy.
Right, Guillermo, could I just ask you a little bit about shares then? Because obviously you've highlighted all the advantages of shares. And now we're seeing a stock market, either you can call it a correction or a crash. So what have you got to say about that?
Well, I always say stock prices move up and down in the short term. That's the nature of the animal. But over the long term, stock prices go up. And the historical statistics show it. And of course, there are no guarantees that it's going to continue in the future, but the trend is there. And it's very likely that it will continue because the economy is going to continue to grow, and stock prices reflect the growth of the economy.
Right, so Guillermo, just for the newcomers or people that don't know very much about shares, basically what we're saying here is you have a company, and as an individual, you can partake in that company by investing in that company, getting some shares. If the company does well, hopefully the shares go up, you make money. If the company does bad, then the shares go down. So we've kind of got a good angle now on shares and what that's all about. So now, Jeff, if I could ask you to tell us about Bitcoin. What's attracted you to Bitcoin, and why do you invest in Bitcoin?
Okay, before we get to that though, I want to ask Guillermo and you, I'm sorry, is that how I pronounce your name?
That's fine.
Guillermo?
Absolutely. Guillermo is perfect.
Okay, just wanted to make sure, very respectful here. So basically, I just wanted to ask you, before I get in and talk about, Bitcoin and why you would do that, I want to ask you, how do you buy? You're saying you get into these index, all you have to do is get an S&P 500 index, right?
That is correct.
How do you do that? How I know how to go on to a cryptocurrency exchange and buy a crypto, hold it to make money, and then sell it for a profit. Now, where would I do that for a stock? Like, how do I buy it? Where? That's what I want. Where can I buy it?
Stocks have symbols. The S&P 500 index exchange traded fund trades under the symbol SPY. And you could buy it on Robinhood, or you could buy it in your TD Ameritrade account or Schwab or any other brokers. You have to open an investment account, and most of these you can trade over your phone, and you just type the symbol of the stock that you want to buy. In the case of the index, is SPY. If you could buy fractional shares, you just put the amount that you want to purchase, or if you just want to buy one share, it will cost you today about $450 per share. So I know that $450 might be a large amount for some people, but you know, if you have in Robinhood, for example, or Schwab, you could buy fractional shares and just buy $100 worth of shares every month. You know, cool. And you just, if you do this, say you buy $170 a month in the S&P 500 index ETF, over a year, you would have invested about $2,000. And over 50 years, 2,000 times 50 is $100,000. You would have put in a savings account, so to speak, $100,000 invested. But if over the last 50 years, the S&P 500 index has grown 10% per year. So that means that if that continues into the future, that 10% per year compounded would grow that $100,000 to be
$1 million, right?
$2.9 million.
Oh, okay.
2.9 million is not, so it's almost like 97% growth, and only 3% of the money you invested. So that kind of compounding is what we're talking about when we say that you can participate in the growth of the economy.
Awesome. So that answers my question. You told me where to get them. So you can get it at Robinhood. You can get it at TD Ameritrade. I think Webull has them. Now that you said that, it got me thinking like Webull and all those other ones. Cool. So that is what's so awesome about cryptocurrency. And one point I'm going to really make here with crypto and why I am in it and why I think it's here to stay and why I think stocks are going to be more now. And I'll let you get more into that. But the cryptocurrency exchanges are accessible right from your phone. All I have to do is go to a trusted Google Play Store or an Apple Store, and I can go download Coinbase. If I'm outside of the US, I can download Binance. And there are a lot of different places where you can just go if you have an internet connection. And even most places, you don't even need an ID. You would for Coinbase, but like KuCoin, you don't even need an ID if you're going to trade crypto. Now, if you're going to do a lot of like making money in crypto, you have to do a KYC for legal purposes, right? That's just to stop money laundering and any other illegal activity, which is what crypto had a very bad stigma in the beginning of just a lot of illegal transactions. And now, as you saw with that $3.6 billion Bitcoin bust that happened with the rapper of New York, that it's easily trackable. Now, you can get away with it. They got away with it for a little while, but you can't move that kind of money around without, ruffling feathers. And so it really can't be used for illegal activity and be gotten away with, and actually in the end. So I think crypto is very safe. It is accessible from the poorest person to the biggest institution. So it covers everybody. And there hasn't been something like that. And now stocks are starting to be that way, accessible to everybody. But before, in my generation, when I was 25, let's say, before cell phones, I would not have known how to go buy a stock. Like I just wouldn't have known where to go. Like, do I go to a store or something, you know, before the phones? I'm like, I wouldn't know what to do. So that barrier for entry is what is going to bring so much money. Like you said, compounding by 10%. Well, that might be by 20% now, because there are so many more accesses to it. And that is the problem with crypto, with stocks, the barrier for entry. If you can cut out some of the barriers for entry, you open up a whole world of money to stocks, to crypto. And then in the future, that's what you're saying is the same with crypto. If you go back to 2009 when it was incepted, and then every 4 years, the supply and demand is built into Bitcoin. That's what I love about it. And that's why I got into it in 2017, is the supply and demand part of Bitcoin, because it basically guarantees itself to go up in value every 4 years. It has a finite supply of 21 million. There's 19 million out there right now. So that's why I would invest in crypto. I could go all day, guys. I'm telling you, I love crypto and I could talk about it all day long.
Right. Just one thing, Jeff, that you mentioned. So for some of our viewers who don't know, you mentioned the word KYC, and KYC stands for Know Your Customer. And obviously, when you sort of sign up with something like Coinbase, they want to know your details, your name, address, your date of birth, and stuff like that. So yeah, that's pretty cool, and that's a really good explanation. As far as myself is concerned, I'm kind of a bit of an oldie guy. So, you know, You said earlier on, well, I wouldn't know what to do. Well, when I was in my 20s, what I did was I had to go to a financial advisor. And a financial advisor said to me, give me £50 or $75 a month and I'll take care of it for you. And call me in a couple of years' time and I'll tell you how well you're doing. So that's how I started. That was the basics. But obviously now with crypto, I mean, I've seen something there that's exciting, that's revolutionary, that's going to change the world, and I want to be a part of that. So my son does all the wheeling and dealing for me. I just give him the money, and then we just enjoy. So that's me. So now one of the things that I'd like to move on to is, because this is something that Guillermo always sort of, whenever we have a conversation about Bitcoin, he always says to me, yeah, but what about the income? You know, what about the profit? How do you make it? So this is where you come in, Jeff, because you're the expert on crypto. So explain to us all, how do you make money on crypto? We know there's a store value, we know you can buy it and we can wait for it to go up, but if you want to get a bit of income, how do you do it?
Okay, well, that's easy. And for right now, we're able to do this. So what I am doing is I am getting into stable coins right now. I'm not showing it on my portfolio or anything, but I have about $6,000 in stable coins.
Jeff,
and
can I just stop you there? Can you explain what stable coins is? Because obviously you're giving us all this information and you're using these words and a lot of people don't understand them.
Yeah, no problem. Okay, so a stable coin is actually a cryptocurrency that is tied to either an asset or the US dollar, which the USDT was supposedly, there's a lot of FUD in there, but we'll leave that out. So it's basically tied to an asset or the US dollar to let everybody know it is pegged. And what happens is when the price of crypto goes up or down, it barely moves. So if it's supposed to be $1, it can go to like $1.01 maybe. You know, but it doesn't go to like $2, $3. It'll stay right around $1 right there. And so what you do with that is you take it and you put it on one of those places like either Coinbase, which really doesn't have that high of returns. But there's places like Celsius and other places where you can stake those cryptos. So if you put 6,000 in there and you have a 10% interest rate, you're going to make like $600 a year off of that $6,000. I know that's not a whole lot, you know, but that is free money. That's passive income while you're waiting for the market to recover. Another one, well, instead of just waiting for the market to go up, and the only way that you can make money with Bitcoin is when it goes up, that's boring. I mean, it's not really boring, but it can get boring when the market's not doing anything, right? So I figured out a way, and this is my favorite one. It has to do with stable coins as well. And this is how I made my first 10,000 into 20,000. When I doubled my money the first time, this is what I did. I waited for Bitcoin to go to $60,000. This is the first time Bitcoin did it. I called it a couple weeks before. I was like, Bitcoin's going to 60K. I have it in one of my videos before. And it did. It went to 64, I think. but I sold at exactly where I said 60K. I had a stable coin position. And what I did is I put all of my Bitcoin into a stable coin at 2.24 Bitcoin. Okay. And then what happened is the price of Bitcoin went down to 45,000 after that. So I would make money if Bitcoin went up, or now if it goes down from 60 to 45, I now get 0.38 Bitcoin. So I started out with 0.24 Bitcoin, and now I almost got half more of that added to my thing just by, it's kind of like shorting the market because you're hoping that Bitcoin goes down. But really what you're doing is you're protecting that all-time high level, because in crypto, there's like resistance levels, and then you have all-time highs. And when you reach that point, the likelihood of you going past that and staying past it is very, very low. So when you put it into a stable coin at that level, your chances of Bitcoin going down and you're able to get more Bitcoin. So what you could do is you could sell that 0.14 that you made, keep the 0.24 that you had, and take that 0.14 as profit and cash it out. Keep what you had, and that's how you make money in Bitcoin.
That's brilliant. So now let's, before we go on to Guillermo, are there any questions that you'd like to ask Jeff about Bitcoin? Is there something that you need clarifying or you don't understand?
Yes, the premise that Bitcoin will go up simply because there's a limited supply. How do you reconcile the fact that other cryptos are emerging that may have better features than Bitcoin does?
That's a very, very good question. And it all has to do with Bitcoin being the dominant factor. There's something called the Bitcoin dominance. And I'm going to explain that for you guys that don't know. I bet you, Guillermo, and you, Steve, know. But the Bitcoin dominance is the overall market cap of all the crypto. And all of the crypto makes this big bubble, right? Well, Bitcoin owns a big portion of the entire bubble. So what you have is Bitcoin, and it controls the whole market because it's the first one. So the Bitcoin takes part of the bubble, sorry. And then the rest of crypto takes the rest, right? And then Bitcoin basically controls the rest of the market with its weight. So that's why I call the Bitcoin hammer in some of my videos. It hammers the altcoins down just with going up and down, because Bitcoin controls the market. And when altcoins go up and down, it's controlled by Bitcoin's massive movements. Now, you saying another crypto to come out and change that? Well, we've had how many cryptos come out? 1,000 or 2,000, 3,000. I don't know how many. None of them have been able to do it so far. The closest one is Ethereum. And everybody said it's going to overtake it. Well, it hasn't happened yet. I'm not a Bitcoin maximalist, but I think it's probably not going to happen. I think Bitcoin is here to stay. The reason I say that is because if Bitcoin gets overtaken, that could really disrupt the whole, which I like to disrupt things, but I think it could really hurt the whole market that was for you, Steve. So I think it could really cause the market to fail in a major way. Bitcoin is the catalyst, right? And maybe we can silently move Bitcoin to the side later on and, kind of push it out of the way. But for now, there is absolutely no way any crypto is going to overtake Bitcoin. And I hope it happens, but it's probably not.
All right, Guillermo, have you got any more questions? Or should we move on to your shares?
Well, let me just ask, obviously Bitcoin has dominance now because it was the first, but as its limit in mining gets closer and they don't mine anymore, perhaps Ethereum or Dogecoin or some of the others will continue to grow. And 10 years from now, perhaps Bitcoin will not have the dominant position it has today.
Okay. That's fair.
And there's also concerns about regulations from China and the US, and that the governments come up with a national crypto dollar or crypto yuan that might compete with the benefits of crypto without the volatility, because they will be tied to the currency. How would that disrupt the Bitcoin market?
I don't think it will. That's what I'm saying. The digital yuan isn't going to be anything like a Bitcoin. It's going to be like a stable coin. And there isn't a stable coin alive that could take out Bitcoin. So that's the thing. It would have to be an actual cryptocurrency that took out Bitcoin, not a stablecoin. I don't think.
Right, but then people that choose to get paid in Bitcoin, their salaries, their wages, how could they manage with the volatility? I mean, crypto goes from 60 to 40 in a month. People can't take that kind of pay cut.
Yeah, that's not sustainable. I agree with you. And in that fact, and if you're looking at it as an income thing, then no, it won't be sustainable at all. And I think other crypto would do better in that area. You're right, because the stable coin is way better to get paid in. But what if, say you're getting paid at Bitcoin at 20,000, right? And you get paid $1 million at Bitcoin at 20,000. You're a big celebrity, let's just say, for instance, right? And then, Bitcoin goes up to 60,000. Well, you just tripled your money off of $1 million. Now it's $3 million, right? So, I mean, it goes both ways. What if you got the deal at 60,000 and then, it ends up going down to 20,000? You just, instead of $1 million, you're now only making 450,000. So I get what you're saying there. It isn't going to be a good income. I never thought Bitcoin would be a good income. People take that probably for.
Right, guys, can you hear?
I can hear you. Yeah, Jeffrey froze for a moment there.
Yeah.
Get over into the.
Yeah, it's fascinating, but there's also the risk of innovation by the Visa, MasterCard, and American Express and the banks. When crypto starts encroaching in their payment transfer systems, that they come up with cheaper ways of doing it. What would then be the advantage of crypto in terms of the international payments?
So with the gas fees super high, the international payment system is really bad. And that's why I really am looking for other places besides Ethereum. I'm looking to cheaper gas fees to send money, because that is a big catalyst. You have your Western unions that I have tried to send money. A lot of people, I don't remember what they're called, but a lot of people send money home to their families in different countries and stuff like that. Stipends or so. I don't remember the exact name, what they call them.
Strike.
But it's money that people send back.
It's Strike. It's through the Lightning Network. It's called Strike. The Lightning Network. They do the Bitcoin.
I was talking about the original.
Right. Okay.
Original payment that they used to have for sending money. It was like a stipend or.
Yeah, no. Western Union is very expensive. They could even charge you like 5 or 10% of the remittance.
Yeah, and so that's where crypto has the advantage there. And there's this one called OXT. And what it does is it specializes taking like a US dollar and converting it into the OXT crypto, and then to whatever fiat currency that you have, like say the UN or the peso or the pound or whatever your currency is. Guys, our internet connection is really bad. You guys are frozen on my screen. Can you hear me?
Yeah, we can hear you. Yeah.
Okay.
We hear you now.
Right.
And then I read in the news recently that there was some fraud involving theft of Bitcoin. How safe is your Bitcoin if you put it in one of these exchanges?
That is a very good question. And this will be the last before we get it. Your money is insured on those sites. That's the good part about that. So if you have your money on those certain cryptocurrency sites and all of it disappears, right? It gets hacked. Well, there's an insurance that goes in and takes care of that for you. They are insured. So you're okay there.
And who is the insurance company? Is it a company, or is it a government, or who is it?
That I don't know. I do not know that. I think it's FDIC insured, so maybe that's federal government.
Oh yeah, if it's FDIC, that's Federal Deposit Insurance Corporation. Okay. But in Puerto Rico, there is a lot of credit unions, and they compete with banks for deposits and stuff. Okay. And banks are insured. The deposits are insured by the Federal Deposit Insurance Corporation, the FDIC, up to $250,000. Okay. So the credit unions say, well, we insure your deposits up to $250,000 too. But you know who insures that? That's it's a local government entity here. And you know, the Puerto Rico government is broke. it's in bankruptcy, and they're negotiating, you know, the payment of the sovereign debt at a discount. So imagine the bondholders are getting a discount. So that insurance, I hope they never have to claim it, but it's not the same as the Federal Deposit Insurance Corporation, I am sure. But anyway, you know, the regulators just get a failing credit union and they merge it with a successful one, and they are done. They don't have to ever pay out the depositors. But if they did, they wouldn't have enough capital, because they have, like, I think $50 million in assets, and they're insuring about $6 billion in deposits. So you can see that obviously, you know, they don't have the resources to pay all the depositors. So I wonder if in crypto, you know, the deposits, sure, they're insured, but who insures them, you know? And
right.
What they pay.
Right. So what I'd like to do is just briefly add something to the crypto conversation, and then we'll move on to you, Guillermo. So the first thing I'd like to say is within the last few days, Rio de Janeiro, Brazil, have decided to accept 1% of their treasury is going to be in Bitcoin. Okay, so that's something new that's come out. Also, obviously, we know about El Salvador accepting Bitcoin as the currency. And also, there's something about Argentina, because Argentina's now moving towards Bitcoin as well, because what they've done is they've accepted the Lightning Network, and they're building on that with a future to go Bitcoin the same way as El Salvador. In terms of the United States, there's a magazine, it's called The American Banker. I don't know if you've heard of it, but they reported a story to say that there's 300 community banks that are going to be accepting Bitcoin, so that you can, you know, buy and sell Bitcoin. So on a positive, there's still a lot going on in Bitcoin. I know we have our sort of doubts, we have our worries, but, you know, there are some positives. Right, so now what I'd like to do is move on to shares. Now, with shares, we know that you can buy shares, you can wait for them to go up and down, in the same way as you can buy Bitcoin, wait for it to go up or down. But there is a way you can make money, and Guillermo, I know that in your videos, you've been talking about shorting and puts and all that kind of stuff. So, in brief, tell us about that so that Jeff knows how that works.
Absolutely, absolutely. When you buy stocks, you know, many of them pay a dividend. So if you just hold it, you buy and hold, you get the dividend every quarter, and so that could be 2% or 5% of the value of the stocks, depending on the dividend yield that each company provides. Also, you know, you can, if you were so inclined, you could sell covered calls against your long portfolio, and that would increase the yield an additional maybe 1 or 2 percentage points per year. So it's a way of receiving income while not yet realizing your capital gain.
So this was an amazing collaboration with the amazing guys over at Disruptive Wealth Creation, Steve, great guy, and Guillermo of Finance ABC. Now, you guys just listened to us talk about the options between stock market stocks and cryptocurrency cryptos. And what we did is we gave you the finer points of each. Now it's up to you to decide what you're going to do with it. All right, guys, that being said, you know what time it is. Goodbye and good Bitcoin. Bang!
Guys, this was a great collaboration. So thank you, Jeff from Bitcoin Renegade, and thank you, Guillermo from Finance ABC. We need to do this again. Thanks.
Absolutely. We'll do it again anytime. So thank you for watching.
Thank you. Bye.